So in today's video, we are going to be going over market structure, how to trade it, how to determine a bias within the market, and then also how to profit alongside that. So if it is something that you are looking to get more of an understanding on, then this video is obviously for you. So the first thing that we are going to look at is the two models when it comes to market structure. We've got on the left an uptrend or a bullish market. This is made up of higher highs and higher lows. That simply means that consecutively the highs are getting higher and the lows are getting higher. On the flip side, if we're looking at a bearish market or a downtrending market, the highs are getting lower and the lows are getting lower. So they are literally the two characteristics that we are looking for when it comes into the market. What are the highs doing? What are the lows doing? We usually, as we're going to go over in a moment, is to look at the market and just basically see what's going on. So if I was to replay the market to this point here, let's just have a look. So this is the 15-minute time frame. So it doesn't matter what time frame you're on. Obviously, when it comes to the higher time frames, that's going to give you more of an overall bias, but the 15, etc., might give you the bias for the day. So if we are looking at this market here, what can we identify from this point here? So let's just start from here. So price created a low, went up and created a high, came back, created a low, went up, created a high, came back, created a low, came up here, obviously created multiple highs like so, pulled back like so. So what do we identify from this market here? Well, the highs are getting higher and the lows are getting higher. Therefore, I would deem this market here to be bullish, okay? Just based off the market structure, that's what we can use to help us. Then what we notice on the right-hand side is that you've got a high here, then a low, price then pulls back, creates this level here, now creates a new low, and then creates a new lower high. So you can see here, the highs are getting lower and the lows are getting lower. So just based on these characteristics now, we can look at the market and basically identify what would happen when we are looking at a certain directional bias. So I know, for example, looking at this market right here, based on the model that we've got on the right-hand side, we're identifying that the market is moving down. Why is the market moving down? Well, we've got a new low here. We've obviously got the high there. And then as you can see, price has continued to push down. So it gives you a directional bias. It doesn't just mean sell or buy at any given point in the market. It just means to obviously take this into consideration. What way is the market moving? And until it gives us a reason not to trade in that direction, obviously we are going to continue. Sometimes you are going to look at a market like this and be unsure in what way the market is moving, but all we need to do is look at the most recent action within the market to see what's happening. So for most people, this is obviously a sideways moving market. Like, in all honesty, yes, it is. The market does seem to be moving sideways, but what we can identify is obviously what has happened previously. So if I go to this point here on the bottom, just for argument's sake, because we can see here that the highs are getting lower and the lows are getting lower. So this creates a low. Price then comes up and creates this area here, pulls back to create a low, pulls back up here to create a high, back to create a low, and then this high then becomes higher. So at this point here, you would still potentially be bullish or looking to buy this market. You can see that using the model, once price makes a high, as long as price respects the higher low that was previously made, the market remains bullish, because you can see we've had a higher low, higher high, higher low, higher high. Prices then continue to respect the higher low, meaning that we are now obviously still bullish on this area. The minute that price then breaks this area here, so what I'll do just to make it a little bit easier, let me just do this and I'll remove that drawing. The minute price breaks this area here, and you can see we respected it with wicks, once you get a close past this area, look what happened. Price then pushed down aggressively and then almost straight away went and retested this low here, and then you've obviously got this low there. So just based off the market structure shift, we have then identified that this market is potentially bearish or beginning a downtrend. It doesn't always mean that this is the case because it's the market. Not everything is 100%, but you can use this just as bias when it comes to which way you want to trade the market. You can see, for example, if I was to rewind to this section here, is that when the market is moving sideways on, let's say, the 15, you will notice that if I was to drop into the 5, you are still going to get a little bit clearer pictures of what's happening within the market. Vice versa, if you go down to the 3, there's going to be trends within trends. So every time you see something like this, and what I'm going to do, I'm just going to draw a channel. Every time you see a channel like that on, let's say, the 3 minute, within that, in the 1 minute, there is trends. So there's always trends within trends. So you can see here, price being pushing down, creating clear structure on the 1 minute. But if you go to, for example, the 15, it's literally just a range. So depending what time frame you are trading is obviously going to deter how you look at the market and how you see things. This is simply just on a market structure example. So we've seen here a shift in bullish market structure or the uptrend, and you can see then prices continued then to push down. Now, what happens in the other scenario? So what I want to do is quickly look at this market here, and luckily there's an example here which we will go into. So if we are looking at this market here, we are identifying that the market is moving down. The market is moving down because we've got high, low, high, low, high, low, and then also you've got a mini high here. So when we're looking at this market structure here, what are we saying? Well, we're saying that this pullback here created this low. So this here is what I would call like an internal swing. Because if we look, that is the high that created this low. So I am basically saying by looking at this market, as long as price respects this high here, that I am down bias on this market or I am looking for sells. If price breaks this high, then I will change my directional bias because obviously price is no longer respecting the characteristics. Some people, and this is where trading becomes subjective, might say that this here is the swing high because this was the high made before price broke the low. So there's two areas that you could potentially look at when it comes to this market. Some people are happy going off the smaller because if you go on to, let's say, the 5 minute, you can see that it's a clear high within the market. Or some people might say they want to stick to the stronger one, which is here. But let's just play out what happens. Price comes back. You can see here that price has now created a higher low. Why is this a higher low? Because this low is higher than the previous. Okay. And then what happens? Price has now started to make it shift. So now when I'm looking at this market, price has made a new high. So what am I looking at? Let's just look at the recent market structure to identify what we're looking at. This is the high. This is the low. This is a high. This is a low. This is a high. This is a low. So now you can see if we are, and obviously we've got this area here. So you can see we had a lower high, lower low. Price has now broken that lower high. So we are now shifting our bias on this market. The way this looks is that if price is pushing down like so, once this lower high is made, price might make a lower low, but then push like so. Once price pushes like so, we've had a market structure shift. This shows a change of behavior, change of character, and we could maybe look to get in on this retest in this structure. If we see what happened when price came back, let's just have a look. You can see price then came back into this previous area, which was resistance, now retesting it as support. Remember, because this low here made this high, we are bullish on this market unless price breaks the low, which made the high. And then as you can see what happens, you see you got some reactions there. Price is still respecting the low, which made the high. And then you see you get your final move. So it doesn't necessarily always have to be a break and retest. It can sometimes be what we call a double bottom, meaning price doesn't necessarily have to do this to push up. It can also do this. So the two areas of interest, you know that based on this market structure, as long as price remains within this area here, because it's the low that made the high, you are bullish on the market. If price was to push through this area here, like so, then I would obviously change my bias. Now, the thing which some people might get confused at is that this structure here was obviously made on the pullback. So this is something you can take into consideration as well. Some people may look at this market and say, well, I'm actually down, I'm bearish on this market because price has obviously done this. But if you look, all you are looking at, this is the low which made the high. As long as price stays within that range, you are bullish. If price breaks it, you are bearish. Okay? So that is basically how you would utilize that position. You will tend to find that then market structure shifts are a very good way to identify potential reversals within the market. And you can see, just for example here, this is quite a good example. Market was trending down. Why was it trending down? The highs are getting lower and the lows are getting lower. So we know by looking at this market that this area here is the high which made the low. So as long as price stays within this kind of range here, we are bearish on this market. We are obviously saying that price may push down. So then what do we see happen? Price then breaks this structure. So instead of potentially, and you see here the retest actually did happen, whether it gave you an entry using your strategy, that's a different thing. But you can see now that price has now done this. So this low has now made this high. So this here is our structure points now to say that we are bullish on this market until price breaks this low. Okay? Because this is the main swing. Now within this swing, when price is starting to pull back, if you go on the 5 minute, the 1 minute, it's going to look like price is in a downtrend. So as long as you obviously keep in mind that you are trading with the overall swing, that's all you really need to keep on top of. So when it comes to it, what you could potentially do, and what I'll do after this example here, we'll go on to, let's say, the 4 hour and just see how we're doing. So you can see here, you know that you are actually bullish on this market structure here. You can see prices come down. It doesn't necessarily have to come down to a certain point within the swing, because as long as price stays, obviously like so, price has done that. So if we were to go into, let's say, the 5 minute, you can see that some people might say here, well, you know, this low made this high. Price has obviously come back, retested it, dropped. As long as you know that price at some point is going to turn around within this swing to go higher based off the higher time frame analysis, that is the main thing. So if I go, for example, onto the 4 hour chart, let's look at the 4 hour. This is a really good example. So if I'm looking at the 4 hour chart, this is how I will get my bias for the day, for the session, whatever. So price created a new high. This was created by this low. So looking at this market now, I know that I am bullish on this market due to this reason. Okay? So due to the fact that price is trading like so, I would be bullish on this market, and that's overall. If we go into the 60 minute though, you can see as well, what have we got? Well, you can see that price has created a new high. We've not managed to close above it though, so I'd probably try maybe wait for a close above. So something like, let's have a look. Let's just see, and you can see in this example here, it evened it out. So let me just play it along a little bit and see where we're at. So this is now the market structure we are looking at. So we know that on the 4 hour, the market is bullish. Doesn't necessarily mean we are only looking for buys. We can see on the 1 hour, that price has now broken market structure. So we could potentially look to get in somewhere within that region. And again, this isn't going to work every time, but we could look to maybe aim for something within that region to target this region here. So we are using the 1 hour structure to target the 4 hour structure, because we know that price is currently trading within this swing point. Obviously, price doesn't necessarily have to do that. You can see price now reacted off the low. And then you can see price comes into the area. You might get an entry, you might not. Obviously, price has already filled the bottom. So what we are looking at in this scenario is that, well, price has now retested the bullish structure. So instead of maybe trying to short it here, because the target has already been hit, we might not want to risk trading that market, okay? Because the area has already been hit, proving that price may push up from this area, okay? Because price is pushing up from the area, we kind of lose our risk to reward, because ideally you'd see the break there, pull back, then target this before price continues higher, okay? Let's just play out obviously what happened. You can see there was a reaction off the level, and price did actually eventually push down. So that area that we initially had would have been good. So what is the thought process behind it? The 4 hour is bullish. We've made a high low, which creates a higher high. So we are bullish on the 4 hour. We go into the 6-day. We know that we are bullish, but price has started to create bearish market structure. Now, where can we target once price creates the bearish market structure? Well, we can target the 4 hour low, because potentially what we are going to see is that price comes down, retests it before continuing bullish. Price has done that. It's come back into the area of interest based off the area that we are validating as bearish market structure. And then as you can see now, price has then created a new low. So you're bearish as long as price is within this range. So that is basically how I would personally look at the markets and go off market structure. I'm hopeful that this has obviously helped a couple of you if you've made it this far in the video. As always, links to everything are in the description if you want to be in the group, the community, whatever it is. So yes, guys, if you've enjoyed the video, please leave it a like. Anything you want to see on the channel, just comment, and I'll see you in the next one.